So how do you use? How do you use and plan with economics? What I do and what I actually recommend for you to do is to plan. Use these news data, use these economic schedules to plan your day. Step one is to plan for the day. What are the major potential market mover news? When is it going to happen? What time? What news is it? What currency pair? This gets you to step two when you know when to pay attention to which currency pair. Right? Last time I shared with you about currency pairs, we had a whole range of different currency pairs. You're not going to be able to sit there and watch every chart. You're not going to be able to sit there and watch every move of the currencies. So using news, using the scheduled news, using the data being released or almost scheduled to be released, it helps you plan which chart to pay attention to, which ones are likely to have the most movements. It gives you the understanding that the data measures and its potential impact so that you can say, I want to focus on the US yen, or I want to focus on the Euro US dollar because there is a Euro news coming out. Would you focus on the Aussie dollar, the Aussie US dollar, if there is a Euro US news coming out? Probably not. And because all these markets are going to be releasing news at different times, it actually gives you the opportunity to focus, drill down, and actually identify potential trade opportunities with those news coming up. I hope this makes sense to you. Next part I'm going to share with you is highly important. I hope you are taking notes. The hierarchy of economics. I've actually filtered it down to these 7 points, and it's in a nice little pyramid there. I know you will. This should be something you become very, very, very familiar with. It starts right at the bottom with households. And the news from households would be the employment data and the consumer sentiment. The next one up will be businesses. The news with this will be the purchasing managers index. After that will be banks. The news with this is building permits. Then government, which is the gross domestic product, the GDP. And then central bank, right at the pinnacle of this pyramid, which is the monetary policy from the interest rates, the statements, and possible QEs, and also CPI, the consumer price index, which is an inflationary measure of data of measure. You see that it is a pyramid, and the reason why it is like that is because the largest number that affects is households. Then from everyone, we're all in the households. From there, we go into businesses. Smaller number of businesses, a few banks, even lesser governments, and from that, we have the central banks. So that's just based on, it's set up based on the volume of how many people it takes through this pyramid. However, what you're going to take note of is the news that comes from the central bank is going to have a lot more impact than the news coming from employment data. A change in interest rates is going to have a bigger impact than employment data. A change in consumer price index or action taken towards improving consumer price index is going to have bigger impact than building permits. So that's why we have it in a pinnacle, in a pyramid this way. Central banks right at the top because they have the most impact for everything they do, which will filter down to the government's GDP, to the banks building permits, to the businesses purchasing managers index, towards households, employment data, and consumer sentiment. We will be working through all these 7 news today as I explain to you what it measures, what to look out for, how to apply it, and then I will also be telling you things that you should be doing after this session to practice and to understand better of how these economic data can be used towards your overall trading applications.